All right, today we've got a real economic showdown on our hands, a clash between two emerging market titans. In one corner, you have the rising Asian giant, India, and in the other, the industrial powerhouse sitting at the crossroads of Europe and Asia, Turkey. So we're asking a simple question. Who's going to win the 2025 growth race? So yeah, who's going to take the crown here? Which of these economies really has the momentum, the stability, and, the confidence of the world behind it? We're not going to make you wait. We'll give you the verdict right up front, and then we're going to break down exactly how we got there. Okay, so let's just get right into it. The headline numbers, the ones coming from places like the IMF and the World Bank, they paint a pretty stark picture. India is projected to just gallop ahead with a GDP growth rate of around 6.5%. Meanwhile, Turkey's forecast is, well, it's a much quieter 3%. I mean, India's growth is more than double Turkey's. That is a huge difference. So the big question is, why? What's going on here? To really get why that gap exists, you have to start with the single biggest factor shaping these two economies right now, and that's inflation. And believe me, this isn't just a story about numbers. It's a tale of two completely different realities on the ground. Now get this. This number, Turkey's 30.65% inflation rate for January 2026, is actually an improvement. Yeah, it's the lowest it's been in a few years. But let's be real here. When inflation is over 30%, the money in your pocket is just losing value at an incredible speed. Savings get wiped out, and it creates this deep, profound uncertainty across the entire economy. Now, flip over to India, and it is a totally different story. India has managed to keep its inflation under control, right in that stable 4 to 5% range. And that's not just a boring statistic. It's the foundation for everything. It gives people the confidence to go out and spend, and it gives businesses the stability they need to invest for the future. One of the sources we looked at just nails it with this quote. This kind of runaway inflation, it infects every single decision. What you buy, if you can save, how you even think about the future. It's probably the single biggest hurdle that Turkey has to overcome. So, how did we get to this point? This massive gap in inflation didn't just happen by accident. It really comes down to the choices made by each country's central bank. And boy, have they taken two very, very different paths. The approaches here are just night and day. On one hand, you have India's Reserve Bank. Inflation is under control, so they're holding their policy rate steady at 5.25%. It's neutral, it's predictable. Then you look at Turkey. Their policy rate is a sky-high 37%. And get this, they're actually in an easing cycle. They just cut the rate. Now, cutting rates even a little bit when your inflation is over 30%, that is, shall we say, a highly unconventional approach. And the takeaway here is crystal clear. India's careful, predictable monetary policy has created this anchor of stability. And in today's really volatile global economy, that stability has become its most powerful economic weapon. So you have these completely different policy paths, and they have a very real, very visible impact on, well, the value of their money. This is where all that economic theory hits the street. You can see that instability written all over the Turkish lira's performance. While the Indian rupee has been pretty stable, the lira has just been on this long, slow slide. For regular Turkish citizens and businesses, that means the cost of anything imported is constantly going up, and the value of their savings is just constantly falling on the world stage. And if you look at it against the big one, the US dollar, the story gets even more dramatic. The lira actually hit a record low of 43.5 to the dollar in February 2026. This kind of severe devaluation makes it incredibly expensive for Turkish companies to pay back any debt they have in foreign currencies like dollars or euros. So, after everything we've seen on inflation, policy, and currency, where would you put your money? Because that's really the ultimate test of an economy's health, right? Where are global investors actually willing to park their cash? This quote from one of our sources just absolutely nails it. Capital is a coward. Big or small, investors are looking for the best return they can get for a certain amount of risk. And the one thing they cannot stand is uncertainty. So why is India one of the hottest destinations in the world right now for foreign investment? Well, it's because it checks all the boxes investors are looking for. They see political stability, a central bank that's predictable, and, of course, a massive domestic market of 1.4 billion people. It's exactly why giants like Apple and Google are pouring tens of billions of dollars into the country. Now, on the flip side, you look at Turkey, and the picture for investors is almost the exact opposite. The risk factors are pretty significant. You've got that extreme currency volatility and that stubborn inflation creating a really unpredictable environment. And for a lot of long-term investors, the risk just outweighs the potential reward, and that makes them very, very cautious. Okay, so let's zoom out for the final verdict and take a look at the very DNA of these two economies. What are their core industrial strengths? And this is a really fascinating contrast. India is placing this huge bet on the 21st century knowledge economy. It's the world's back office, a software developer for global companies, the pharmacy of the world. Turkey's strength, on the other hand, is in powerful, sophisticated manufacturing. It's a major European hub for cars and home appliances. You can almost think of it as the code writers versus the car makers. So, when you look at all the evidence, the verdict for this 2025 growth race is pretty decisive. Based on that projected growth that's more than double Turkey's, a stable inflation environment, and just a flood of foreign investment, India is the undisputed winner. The momentum is just really powerful, and it's built on some very solid fundamentals. But hey, this isn't the end of the story. To just dismiss Turkey would be a huge mistake. The country has some incredible fundamental strengths: a strategic location like no other, a world-class industrial base, and massive tourism potential. If its leadership can just stabilize the economy and win back that investor confidence, a Turkish comeback could be incredibly swift and powerful. And all of this leaves us with one last question to chew on. In this global race for economic dominance, is that slow and steady path of stability the only way to win? Or can a high-potential economy, one that's navigating some pretty high risks, actually find a way to stage a dramatic comeback? That's a question that's going to define the next chapter for both of these nations.